You have entered into the black hole of real estate, a place for industry news, tips, and strategies. Once you enter into our vortex, even if you could leave, you're probably going to want to stick around. I'm your host, Ron Weiss-Sikarski, and you are now entering the black hole of real estate.
Welcome back to the black hole of real estate. And we've got a couple of things that we should be talking about this week. The first thing is the foreclosure bans have been lifted, and there's still some conversation about how that actually is put into play. We're also looking into this incredible increase in price for building materials, and that seems to have some effect, but maybe not as much as you think. And then the last thing, this bubble crisis that we're all facing right now, there's a lot of information coming out that's talking about a crash of the market in foreclosures. And at the end, I'm going to tell you why I feel the way I feel about that, but I'm not going to tell you about that till we talk about the other things. So, first up, the eviction ban, the foreclosure ban, those are all being lifted right now. And there is some talk in the municipalities and courts of the area to kind of do their own thing. And it's a little tricky on the property management side right now. You've got the go ahead that says, hey, you can evict again. But then there's other procedural things like any eviction that also get in the way. So it's not that, okay, hey, you know what? Eviction ban's over. You're out the house. It's not that easy, but the path is back in place to get back to a more familiar system of evictions. And that's what we'll be seeing over the summertime, probably after June 30th. It looks like that's what's going to be taking place. So this just in, we're back to the old days where if you pay, you stay, and if you don't, you won't. And maybe that's insensitive. Maybe somebody has a good reason for that, but the person who owns the property has a good reason for renting it out. They may need to pay a mortgage, they may need to pay a debt, or they invested that money to have income for some other purpose. So we'll just see how this plays out. But right now, I believe we're heading back towards eviction land. How's that? So we'll see how it plays out. And it'll be an interesting summer for that for sure. Same thing with the foreclosures. And if you're waiting around thinking this is the year going to get that great foreclosure at that great price, I don't see it. I just don't see it. Prices have risen so dramatically in the last few years that if anybody bought in the last few years, typically say, oh my God, they can't get out. By the time they pay commissions and fees and taxes and late fees, they're not going to get out. Prices have gone up significantly. My suspicion is that somebody who didn't pay for their house last year under forbearance that can't pay for it now or won't pay for it now that is heading towards a foreclosure could simply put it on the market and sell it and clear some cash. Now they're going to have to figure out a place to move into, but maybe there'll be some new open vacancies in the rental market. They're probably not buying again anytime soon because going through forbearance and then all the things go with it probably is not good to get a new mortgage if you don't pay for it. But we'll see. We will see on that piece. But even if a house unlikely somehow makes its way to foreclosure land, it's still got to go through the whole process, which could be 3, 6, 9, 12 months, and every kind of, I would say, strategy, not tactic, to delay that foreclosure. At which point, I would think some bank, some trust, some real estate firm, some hedge fund, somebody's going to slide in. I'll just buy them in bulk. I don't think they ever make it to the market. That's what I'm saying. I think it's the rare property that makes it on the market right now is a foreclosure. It's a few percent of the market compared to like 70% in 2008, 9, 10, those years. I just don't see it happening. And, prove me wrong and we'll deal with it. It's not really a good thing to see all those foreclosures. I think if you're opportunistic and an investor, you might want to see it, but there's still deals in this market, even as we speak, with super low inventory. I won't spend a lot of time talking about inventory. I'll just say, you know what? It's low. Okay, that's not news, but that's the space that we're in right now, and that's what's going to continue to happen. Um, the thing that everybody has on their mind right now is when's this bubble going to burst? When's this surge forward going to stop? I'm an evidence guy. What caused this market to surge forward? I'd say a lot of people want to move or invest in properties so that people can move into their rentals. But movement is the key. And a year ago, we had a COVID thing and lockdowns, and that really didn't stop a lot of people from moving. That's a pretty good reason to stop moving, and yet they didn't. So I don't believe that people don't want to move because it didn't happen last year, and I believe it's going to happen this year. And people move for reasons other than market prices going up or down. They move because they want to move. Their life situation has changed, and if that is uh, adding a spouse, deleting a spouse, if there is a baby coming in, or maybe there's one going to college. There's all these reasons to upsize and downsize and blend your families and move in together. You know, there are estates and trusts and reasons, and investors sell too. It's a high market. Some investors are, saying, "Hey, you know what? Let's just cash in our chips over here. It's been a good run." There will be inventory that will come onto the market. But again, people wanting to move, that's what caused this to happen. And we can talk about housing shortages and anything else that you might imagine. But there's a shift in population where people are moving away from certain areas. See, not every market has an inventory shortage. A state like Florida, where a lot of people are moving to, perhaps Texas, and there's some other ones out there, where there's a large influx of people coming from other states. They're causing shortages because there's just this giant influx of people that are buying up the properties that are available right now. And new construction simply can't keep up with the demand. And yeah, you know what? That bit about building materials prices I talked about earlier. There's statistics out there that lumber is 3, 4 times what it was this time last year. We know that labor could be double, materials could be 2 to 3 times higher. It is adding to the cost of building a brand new house. So prices are going up not just because prices are going up. They're going up because the materials and the things that cost to build the house are going up. So some of the lift in this market isn't all about bubbles and prices being driven up. It's the cost of building the homes that's going up. There's a lot of reasons that market rises. It's not always the one that you think or identify or being told. What if somebody came to you and said, listen, my real estate business is up 30%. Well, if the market's up 40%, that's not good. Well, what if somebody also said that housing prices are up 20%, but building materials are up 30%? Maybe it's just the cost of materials. Maybe the house isn't any more valuable on its face as an appreciation tactic. There's an inflation piece that's in this, and we have to be aware of that. Let's not be caught into the disguise of the numbers. Let's understand there's a lot of reasons that prices are moving up. And certainly demand for people moving from one state to another certainly is part of it. Lower inventory, low inventory isn't as much of a factor as you think it is. As long as you've got 2 months supply of inventory, we saw in the condo market that there was about 250 condo sales in the Daytona Beach area in the last month. There's over 500 condos available. Now, it's less than 1,000 available last year, but it's a 2 month supply. And as long as more inventory is coming on the market, there'll be enough for a few months. I'd argue that having 6 months or 8 months or 10 months isn't necessarily awesome for the market either. It gives you a lot more to choose from, but I don't know that really is awesome for the market. So I think we get tricked into low inventory as being a problem. It's the cost of moving. It's the cost of materials. It's the desire to move. It's having fewer choices to select from. Hey, I've been there with clients that have 15 or 20 good options. They don't make a decision any quicker when there's 15 or 20. And even then, I still can't find the right one. We hear it all the time. So I don't know that the inventory is as much of a problem as we're letting it be right now. And I'll just say it that way. Now, what I do think is a problem is interest rates. And when they eventually go up, that's probably the lever that's going to make a little impact on the market, but not a huge one. The price of the homes has gone up, the rates have gone down. It's actually a little more affordable to buy a house this year than last year. We talked about that last time around. With a $25,000 differential in median sales price and the rate going down about 1%, it's actually about $30 cheaper a month to buy a house. So that's not the reason. But even if rates go up another percent, you're talking about a $10, $20 increase in the monthly payment. Not enough to stop most people when mortgage payments in the $1,500–$1,600 range for those. That's not enough. It's at 10, 15. That's a couple of cups of coffee at your favorite barista. That's not enough to stop most people from buying. When rates rise dramatically and they go from 2, 3, 4 up to 6 or 7, that can be problematic. But the Fed insists that's not going to happen, at least not this year. So if inventory is not the problem and people still want to move, well, that's not the problem. And materials cost more, it's unlikely prices are going to go down because it costs too much to build a house. And that supply chain issue that we're being told is the reason, maybe it is, maybe it isn't. There's nothing underpinning this market that can just have, get knocked out at the knees. So my suspicion is the prices will continue to increase for those reasons because COVID wasn't a problem. People just wanted to move. And the rates aren't a problem. There's not enough differential in the spread unless you see a dramatically doubling of rates. And the cost of materials hasn't slowed things down. And there's cash out there. Troubled homeowners with financial issues, they likely have enough equity to sell their property, have some profit, or at least a way to get to the closing table. This is not 12 years ago or 13 years ago. It's a totally different reason in the market. So if you're waiting for me to tell you that the market's going to crash and there's a big bubble ahead and you buy some gold bars and hide out in a cave, save yourself the effort. I don't think it's going to happen. Now, if you would just like to buy yourself some gold bars and hide in a cave, that's cool. And I support that. Just don't do it because you think the housing crisis is coming back. And don't be fearful of this market. Truth be told, I bought a condo last month. And I bought one last June. If I was fearful of this market, I wouldn't be buying. And so, I guess, what do they say? Put your money where your mouth is. I'm a buyer in this market. Despite the increase in price, I'm still a buyer in this market. I can't make that decision for you, but the excuses or reasons are minimal right now. So that's what I have for you. No bubble. Not going to burst. Just not going to happen. And if you're hopeful for it, well, there's probably a different podcast out there for you. Because on this one, we don't see any reason this market's going to stop or slow down. That's the word from me from here. So I'm glad that you guys took a little bit of time to listen in. And we look forward to talking to you the next time on the Black Hole of Real Estate.